Is your weekly rate update. As you can see on the chart behind me, mortgage bonds have opened up today roughly about the same as how they ended last week. Treasury Secretary Scott Bessent said that he could use the Treasury General Account, which is basically like their checking account, to fund bond buybacks. And initially, mortgage bonds rallied on this news, but it was pretty short-lived because the market probably realized that the increase was relatively small compared to the issuance that's actually out there and the previous amount that has been seen. And Bessent will be holding a press conference, though, this afternoon to announce Economic D-Day, or new sanctions that the U.S. plans to impose on Iran. So the markets are going to be watching this very closely and to see how it impacts oil prices. Now let's talk about ghost jobs. So there's been some mounting evidence that the labor market isn't nearly as strong as some may believe. The latest BLS Jobs report showed that jobs were lost in July with big negative revisions in the prior 2 months. So that's not excellent news for jobs, but typically that affects mortgage rates for the positive. So we'll see how that shakes out. And then the PCE preview, which is the Fed's favorite measure of inflation, that's going to be released this week, Wednesday morning for July, and the market is expecting headline inflation to rise between 0.1 to 0.2% and the year-over-year figure to remain the same at 3.7. The core reading is expected to rise 0.2% in July and the year-over-year to be unchanged at 3.3%. Let's talk about the reports coming out this week, or the news that's coming out. So tomorrow, Tuesday, the ADP weekly employment data, Case-Shiller and FHFA appreciation reports and new home sales. Then on Wednesday, mortgage apps, the PCE inflation data that I just mentioned, the Q2 GDP second report, and durable goods orders. Then on Thursday, jobless claims, and Friday, the QCEW jobs revisions. And Warsh is going to speak at Jackson Hole Symposium. So could be an eventful week for rates. We shall see. I'll keep you posted and see you at the next one.